right. Hello, everybody, and welcome to not Monday, but Tuesday of this short trading week. I hope everyone in the US had a great long weekend. And of course, you're ready to get in on the action. We hit September, and of course, it went red. It's September. What else can we expect? Coming up in today's show, we'll be covering, of course, stocks, commodities, and cryptos. We're talking about our thoughts on Bitcoin moving forward. Some interesting points I think will be had. Also, of course, deep dive into indices. We'll talk about our medium-term and long-term concepts, along with some short-term stuff today, as it is getting quite interesting. And then we go through what we always do, which is single stock, some of your questions. And of course, if there's super chats throughout the way, we'll answer those as well. How's everyone going? You having a good weekend, good week start off? I hope you are. Hopefully, had a couple of good trades last week, some interesting levels. Let's give a big shout out to people who've joined us here early. We've got Natasha, Dames, Journal, Chris, Anthony, Zulfi, Michael, Peter, Stephen, OG, Gary, Smart Money, Oleg, and Conrad. Madness Monday, says Conrad. Well, it's Madness Tuesday today, man. If you do enjoy these streams as well, make sure to give it a smash of the thumbs up. It does help us out. All right, let's get into it straight away, and let's talk about what we've been seeing. So we'll go over to the S&P 500, I believe, just to begin with, and we will go to the 61.8 fib. So, of course, where we find ourselves is a bit of a heavy retracement here across markets. I think everyone's talking about this level, and it's fair enough to do so. It's pulled back to a 61.8. You've got 61.8 fibs on AAPL. You've got 61.8 just short of 61.8s on Tesla. You've got obviously movements here across pretty much all the stocks because the S&P 500's hit this level. And then we've seen some little changes of trend that have occurred in this area. Now, traditionally, this week brings with it some interesting stats. So let's have a look at the stats that we tend to see leading through. And I think they're over here. Let me just quickly load up. It's going to be this one here. Sorry, guys. There we go. And we have post-Labor Day weeks, pre-OPEX weeks, and of course, post-OPEX weeks. Now, I put this on our YouTube video on the weekend show. And I talked about how this week could be actually negative, next week could be positive, and then pre or post-OPEX is most likely going to be negative. That's the one where usually the pain train begins, if it is going to. Remember, with September's, it's not so much the start that's worrying, it's usually the end. And in pre-election years, we tend to see what we call a double dip. So we've had a dip in August. We often come back up. And then we sometimes see like a doubling dip, which could push us as low as 4,200 or even a 4,150. Now, that's, of course, if the bears get their way. If the bears don't get their way, though, where could we be going? Well, of course, it's new highs. So, a lot of people have brought out some stats to say that if we have a really strong start of the year, so we have those kind of super positive year returns, which is generally a pretty big stat from the beginning to August is somewhere around that 10%. Plus, then even when we have sell-offs in August, which we did put post this year, then usually September and September to December turn out to be 100% positive. So unfortunately, if we're looking at stats alone, if you're a bear, it's hard to get excited about, an overall sell-off. The stats just point towards generally being, maybe some weakness here in September, but October, middle of October, usually being a rally October, November, and December. And that's what the stats show us. Let's jump back into the charts, though, and talk about yields, because, of course, this is the other one that's a little interesting here. We had the non-farm payrolls results. They showed us that the jobs numbers were kind of firm, and at the same time, we had unemployment spike. And even though that happened, we didn't see yields go down that much. In fact, they actually spiked back up. The US dollar has now, in comparison to many other central banks around the world, actually strengthened further. You might not expect that, but it's up 0.55% here today. Then we have, of course, the overall market, which is reacting kind of negatively towards this and saying, well, maybe we're going to see a little bit of further shorting. So we'll get into those ones. China stock market has been doing quite well. We have talked about that. Let's just quickly look at it. Kind of remain optimistic on them doing some kind of stimulus moving forward. Obviously, it might not be the bazooka stimulus, but we do remain very optimistic on 44 plus breakout being very positive for this market. And at this stage, something around this level down here being a defended zone. So somewhere around $38 being a defended zone. Stevenson 720 says, $10. Thank you very much, Stevenson. Appreciate it. It says, hi, have you said when the yield uninverts before recession hits? I was wondering historically how the market performs during the inversion. Thanks, by the way, you're great. Well, generally during the inversion, markets actually do pretty well. That is that they don't tend to sell off during inversion periods. A good way of doing this, if you wanted to test it, thank you very much for the 10 again, is that you would load up a US 10-year and you would basically put against it an SPX. In this case, what I would do is you don't want US 10 years, so you would want US 02Y versus US 10Y. Put that in your chart, load that baby up there, and then go to add SPX as a comparison or SPY as a comparison. And you can kind of have a look at how it's done with inversion. So you can see here, we uninvert somewhere. Well, we probably should have put in a market, a 1% marker. So let me just quickly delete this for a second because it's on percentages at the moment. So if we have like a 1% marker, which is here, and then we maybe, actually, you know what, we'll just load in one forever. There we go. And we'll put SPX on the chart. It's a good question, so why don't we answer it? And then we have a look at how it worked last time. Here's the inversion, here's the uninversion. So what happens? We actually get a bit more of a rally, then suddenly we get, you know, a very bad time. Now you might say, well, Tom, you didn't know that was going to happen. No, I didn't know that was going to happen, but something was going to happen. And I bet you no matter what, 2020 was going to bring the pain. And the main reason is because when you actually look at the stock market leading into this whole 2020 crash, it was getting a little bit FOMO-rific. So what was going really well? It was ARK style stocks. It was stocks that make no money. It was Tesla getting out of control and going like a 300% return over that period. There was some serious moves. So generally, when you think about inversion and you kind of consider what happens, it usually uninverts and then the market's close. So when that uninversion happens, which is here, the market's close to peaking off. And then we tend to get like a recessionary style market. So here again, we go through, we were already shorting into this one, but I think that's probably the argument. So something like that is what you're looking for. Is it going to be, you know, every single time you know what's going to happen next? No, but I would say that once it goes back to uninvert, if the markets are high, if there's FOMO coming through, that's when you want to be, you know, probably the most concerned. You just want to be maybe cautious, maybe go leverage, don't do those types of things. John Galt says that's a good question. Very cool. Thank you very much. I think it was well worth the $10. Helps everybody else there as well, which is good. And we've got Dave joining us here. AT says, what about 2008? Well, we took a quick look at 2008. You saw the uninversion there. So yes, the rule of thumb is generally you don't really want to be concerned when it's above. You want to be concerned when it comes back out. And hopefully this time around, if you are to use, you know, uninversion as a technique, you really want no one to talk about it as well. Generally speaking, it's when people talk about things, it doesn't happen. You know, a classic case of that is everyone said, oh, property's going to die. It's all going to go down and everything looks really bad. But really, you know, the undersupply has been a huge deal with a pretty solid level of demand. And only just right now are we seeing like maybe a little bit of oversupply and a little bit of weakness in demand for the property sector. Now, everybody said it was all going to crash. Well, it didn't end up doing so just because no one wanted to sell. They were all sitting inside their houses. All right, let's move over now to the short-term time frame. So basically, we have here a market that's coming off a little red, and it did do a little switcheroonie. So basically, we saw a sell that came through on the Monday futures, which happened in here. And this is all happening at the supply. We're actually trading the most traded level over the last kind of month and a half. And we've seen some unusually large activity here. So we've got some dark pool transactions in 3x leveraged funds. We've got big Tesla trade that came through last week. We have a big AAPL trade that came through at this price. We don't know it's a sell, but we can assume that there's probably somebody most likely looking towards the sell, I think, at this level. It may not hold up, but at this stage, we do have some nice signs towards a sell to probably fill this. So this is a very large candle. But I ask you, everyone in the chat, what do you guys think? Do you think that that candle has a lot of volume in it? Do you think it actually holds a ton of trades or not that many? What do you guys think? As we answer that, we'll read a little bit more of the chat. Edwin says yes to recession or no, not recession, to invert or not to invert. That is the question, okay? I put most of my stock money in REITs, XLRE, and VNQ now, along with metals. The contrary usually wins. Well, metals certainly doing quite well. And again, that would be contrary to what most people believe, which of course you'd think iron ore would be getting crushed. We've detailed it here on the channel many times. We have not seen iron ore being crushed. Stevie B becoming a new member. Thank you very much, Stevie B. Appreciate it. And welcome aboard. And then a few other people say there's no structure there. Kyle J. And OG says low volume. And then Kyle says just it's fake volume, man. Shorts closing. Yeah, so I think that is shorts closing. Of course, they're getting squeezed out, but really there's very little trade volume in that candle. And because we know that this was the last big trade level. So if we take a 44.90 throughout this week, unless that instantly reverses with a nice big wick-like style candle, like something like this, we're probably pretty sure that we're going to move down to at least a 44.90. So I think some key levels to watch this week, somewhere around 44.90, obviously 44.90 itself. So 44.40 and 44.90 will be key. And then if we get above 45.50, my God, there's too many numbers here, then we're probably going to a new high. I would say up here is pretty bullish. Down here is obviously temp bearish. Here is very interesting. It's like a question mark. Which way do we go? And if we take a 43.30, yeah, I believe we're going to 4,200, 41.50 at that stage. And the main reason is because there's nothing really underneath 43.30. If you have a look on the charts, we've tested it once. We found buyers. We found buyers again. If we take that level out, next logical zone, go to the most traded level, which we've talked about many times. So is that going to happen in September? Well, based on data stats alone, this would be the most likely kind of thing for it to happen. What do you think of that squiggle line? we've drawn the future, guys, with that one. Anyway, maybe we'll take a snapshot and see how wrong I am in the future. Or maybe right. But yeah, this would be probably the expectation. We've got a 50-50 style week this week. It makes sense if the bears are going to take control. They have a go at it here. Then we generally see a rally into the OPEX week. And then we have usually a sell-off post-OPEX week. Now, that's, of course, a huge percentage. So it's a really wild guess. But wouldn't that be cool? Would everyone like that one? What do you guys reckon? Would you like that? I think a few of you would. We've got almost 700 of you joining us here today as well. Thank you very much. If you can, smash that like button. It does help us out. Liberty Rager says, my issue is Aussie properties been inflating way higher than wages have been the last decades or two. I would think something's got to give eventually. It will, but it'll be a long time away. You've got to remember we basically import money, as many Western countries do. So therefore, because of high immigration and the way the whole system is working out, it kind of turns into a bit of a Ponzi scheme. Let's be real. Massive bond auction today. Sorry, I was going to say action today. Says insert cool name here. Yep, we've got some big bond auctions going on all the time at the moment. And of course, it is leading into some interesting trades on TLT. So it's a good segue to go into this one. I don't know if we've bottomed on treasuries just yet. So I'm looking for a break above 97.38. If that happens, then I think we may have found a temp bottom, if not a good bottom for treasuries. At this stage, I'm actually looking for it to flush everybody. So effectively for these levels to not hold up and us to move back down to 88.90. Now, I've been looking for it for a long time. I haven't got it yet. Could be like one of those famous Tesla trades where I had 144 or 145. And of course, it went to 152 and then ran off. But that happens sometimes, and you have to be amenable to the market and make decisional changes or move on to the next pair. But in treasuries, I could see why people are investing here. What I do know is if you look at any of the reports, I did this in my Monday macro for the private community. If you're ever interested in that stuff, you can sign up for a 7-day trial. And I did find that there was a ton of transactions going on treasuries. I mean, it's like every single investor, every single fund manager, every single person, they cannot get enough treasuries down here. They're loving it. They're just going crazy all over it. And the thing is here is they've been going crazy for a while. This is not a new thing. The flow inflows have generally been huge since here. So a lot of them are in relatively negative territory. Like if you actually think about it, from here all the way down to here is still 20%. Yes, I think they'll get it back. But yeah, it's interesting. A lot of trade going on. I don't think we're at the low of the treasuries yet. We're going to have to watch yields very closely. And obviously, all these auctions are certainly putting pressure on the downside as well. As you get more system or things in here, they demand a higher yield, which is pushing it down across the board. Rental market is a joke. Yeah. Yeah, I mean, rental market has been improved. Again, property is not really probably the discussion of today, but yes, that the rental market has been very, very tight recently through a lot of countries. All right, let's move over to some other bonds here. Let's have a look at high yield bonds, high yield junk. We're seeing that still stuck within the same zone, neither breaking to the up or the low. I still think alerts are worthy of both ends, 75, 74 for the buyers, and of course 73, 40, 50 for people that are freaking out if that does end up happening. If we go over to LQD, which is corporate bonds, very different story. Take a look at corp bonds here. So corp bonds have been weakening off. So these junk bonds, I don't know why they're trapped so hard. It's really weird. I think it's options. I think there's just so many options on the junks. But if we take a look at the corp bonds, investment grade corps, they're still weakening off, even though yields have actually been, interestingly, yields have actually been kind of decreasing or stabilizing. So is this telling us that the bonds market actually doesn't like the current investment mandate? So it's not excited about these corporate grade bonds. They're scared of the businesses. Well, if this keeps weakening off and yields actually stay stable, it's telling you that they believe it's riskier to own corporations in terms of their debt than they did a little while ago. So I think that's kind of leading into, sometimes the bonds market precursors the market itself. So we will be watching LQDs a little bit more than we used to, or we have been. We watched it a lot in 2022. At this stage, we haven't really had to watch it for quite some time. All right, let's jump over to some of the stocks. So we'll start off here with Tesla. Everyone loves the Tesla. So Tesla coming in at 244. Pre-market only a little bit of weakness. There was a large sell that happened last week around this area. We know that this is the key zone with this green box, basically a 61.8, and this bottom end of the box is everything to Tesla right now. For the bulls, you just want to get above this box. You get above this box, smiley face for you guys, probably looking at a new high for Tesla, similar to a 45.50 for the S&P 500. But for now, the bears are going to try to push this thing down. And I think the next stop could be around these lows down here. So what do you guys think? Do you reckon it's a 230 for Tesla this week? Do you think there's lower in it? Let me know in the chat. We'll read out a couple of your comments very, very soon. Let's read. There's a good discussion going on. So let's have a look here. Yeah, Chris, that's fair enough. We could do that. D-Stripe says, isn't LQD full of downgraded banks? Yeah, there'd be a decent amount of banks in there that would be downgrading, of course. But LQD is still high corporates, high grade generally. Gold and silver ratios. Yeah, we could be looking at things like that as well. That's definitely some different concepts we could have here. My gardener says, Tom, honest question. Can you go to the QQQ chart where one bar equals a year? We are so far from mean inversion or mean reversion. What are you talking about here? Do you think all trends follow EA? Oh, anyone know what he's talking about here? I mean, if you're saying if you load a Q chart up and then we have a look at this, so we load a Q chart up, I understand that. Then you can go to a 1 year candle, which is like this. Then we say if this is mean reversion, which is, let's say, a 20 moving average, and we're so far away from that. I don't think you're going to get the 20 moving average on a 12-month 1 year candle chart. I just don't think that's really worthwhile even trying to think about. Generally, if you're wanting to get more notable kind of pullbacks, you're always going to go for this one here, which is the weekly 20, and that's going to give you a lot. And then of course the daily 200 as well is going to give you a lot in terms of just these charts, but not too sure. Tim Cooper says UK is almost 7 times salary of an average house price. Oh, I think it'd be even more than that, Tim Cooper. I think you'd find it's probably about 12 to 14 to maybe even 16. Market's coming back up to flats at this stage. And people said here, Richard says, I love the drawings. Oh, thank you, Richard. Do all good stuff. Do all trends follow each other? Again, very interesting question, very tough to answer. Generally, you want to be following the economic cyclical events. So there's like basically these long cyclical events. I mean, Ray Dalio obviously has his giant cycle, but in general, markets are based on, debt leveling and all sorts of stuff like that. So if you think about debt being one of the biggest creation tools, then you've got to think about when debt kind of becomes toxic and when debt isn't toxic. And you'll find that it approaches like a cyclical event that goes on over time. If you're going to follow a huge trend, that is. Biff Helm says news from China reducing treasury bond purchases will eventually have deleterious effects on markets. I mean, maybe it's bad effects on markets. Yes, that could be possible. A lot of you guys said that the market price in no hike, but DXY keeps pushing. Dollar X index is going to push in comparison to other central banks. So think of the US dollar as the major, obviously, which it is. And then what it's going to do is it's going to push off other central bank policies. So even though you, as in the US, might not be pushing to a higher yield at this point, you've got to think, what are other countries doing? So say, for an example, today, the RBA signaled that they're not doing a rate hike. Okay. So that's no rate hike for the RBA. And a little while ago, it was expected they would do a rate hike. Now, maybe we see Bank of Canada as well say, oh, we're not doing a rate hike either. And then you see the Bank of New Zealand saying, we're not doing a rate hike either, when they may be expected to do rate hikes. So because they're not doing rate hikes, it becomes less desirable to own those currencies. And therefore, we just go back to the major and we say, well, just own US dollars. Why not? Higher chance that there's maybe a rate hike in the US in comparison to those other countries that are too scared to do it. So there's more chance here. We're going to move money in. Plus, of course, people can't quite comprehend how it could even be at these levels. So yeah, it does help you to get there. All right, let's. They had BRICS last week. They want to de-dollarization. Yeah, well, that's the story of the decade. I've said that for a long time on the channel. If you're not aware of the BRICS versus SWIFT system concepts, you are in a currency war, guys. That is what it is. I mean, it doesn't mean we are in some kind of war. It just is what it is. Currency rules. And if you have, the major, which the US does, then it's a very powerful economic technique. And you can use that quite powerfully. So that's a big thing here. Anyway, we're not getting into that. Let's bring here into some other questions. Josh says, I've been selling 90 Baba puts for a few weeks. Am I ever going to get assigned? Do you really want to get assigned, Josh? Let's have a look at Baba out of interest. Everyone always goes to Baba as the number one Chinese stock. I'm not really too sure why. It's not my favorite. Could you get assigned? Well, it's possible. But at this stage, one thing, and that is that somewhere around this low here seems to be like every time it gets down there, we're seeing an announcement from China. Oh, we're doing this. We're making this easier. We're inserting this. We're doing something else. Oh, let's bring some liquidity in. That's the type of thing I'm seeing here in this market. And we've seen it before, and it held and it basically stabilized the TA. And that's what they're trying to do, because they know what people do, and they know that they say it a few times, and then that can help create a little bit of a cushion effect, and then we move on from there. All right, let's go to some questions here about some individual stocks that I've got coming through. So people want to know, what do we think of Apple? The Tesla trade, most of you guys thought around 230 as well. So AAPL comes up to the 61.8, obviously super strong, super bullish looking kind of move here. No pullbacks yet, so it's probably due one. It's down 1% in the pre-market today. It's probably the major thing really pulling the Nasdaq down so far, 1% down. We did see a large sell. Obviously, a lot of people are going to say, well, we need to get this gap fill first, Tom. I'm not so sure you probably want the gap fill. You probably want it shorting around here. And because it has these two little wick candles, if we end up getting a nice big red session for it today, again, I could see it floating on down. I would use the S&P 500 to probably perform the overall support and resistance or the supply and the demand zones for this chart. But yeah, I think it is at a res at this point. At least it seems to be around that level that you would expect bears to take action in it. US dollar, I wouldn't fight the trade at this stage. It's pretty strong. We did see that huge weekly close. So that huge weekly close here, which is going to lead into moving towards 105.20. So no stopping the US dollar for now. I think there's even more in it at this stage, and it's probably going to keep going up just because, of course, of the RBA announcement, Bank of Canada. I think we're going to find that a lot of them are halting on their rate rises. Let's move over to copper. Nothing going on in the copper world. So Dr. Copper not showing us too much. But we also want to look at its iron ore. So if we take a look at future iron ore contracts, you'll notice they're still very stable. So even though all the news is negative about China, we're not seeing any movement in iron ore price. And because iron ore price isn't dropping like it usually does, it means that the market is not freaking out at this stage. You do want to watch iron ore prices because you can see what happened here during 2014 into 15 to 16. That was a super brutal time for the markets in general, and especially anything to do with mining and iron ore. It was a really bad time. Energy also got destroyed during that period. So watch the FEs, watch the iron ore. It's pretty good. $77, good to have you here. Sandollar says 774. What's actually 800 plus people watching. Thank you very much. And he says, smash the like button, support the channel. Appreciate it. Thank you, Sandollar. You've been here for a long time now. I reckon about 3 years. Few of you guys have been here for a long time. I do appreciate it. All right, oil. I still think it looks bullish. What do you guys think? You think it looks bullish? It's breached this zone here, which pretty much stopped any bears having control of this market, and then it's rallied through. Next stop, 90, 92 a barrel. Yeah, some strange stuff going on again. Oil very strong in the back here, which usually you would see yields going up at the same time. So is it precursoring them? Who knows? Go through a couple other stocks. A lot of people want to know NVIDIA. I think NVIDIA is... look, there's a lot of transactions here. I don't want to short NVIDIA. I don't want to sell my investments in NVIDIA, but I also don't want to buy it here, if that makes sense. So I don't like this price. I don't like all the transactions that have gone on through here. I don't like the hype and the FOMO around it. It all smells bad to me. But I don't have any trigger to say, oh, I've got to sell it or anything like that. Because even though there's large transactions here, there was large transactions here. They're everywhere at the moment. There's lots of big ones. So there's pretty much some of the largest transactions of the last 2 years have all gone through here. It could be that we're in distribution pattern and we're about to blow off. But when you're selling semiconductors, which are the best market participants, obviously it's the greatest stock sector in all of the US over the last 15 years of investing or even more, then you really want to pick your poison. And it's probably not going to be the best semiconductor. It's usually going to be one of the worst ones, something like a one that's maybe gone a little bit higher, which is something like an AVGO. Not that it's the worst stock, but it's maybe a little bit overpriced, etc. So I'd be very, very careful there. We're not seeing much weakness from things like Amazon just yet or Google just yet. Obviously, Google going towards the next target at this stage. It's still been kind of like going higher each day. Most of the weakness has come through in other stocks. There have been some really good winners. This is one that I've talked a lot about in my private community, which has been 3M. 3M's looked really strong after it kind of settled one of its lawsuits. It's got a few others, I think, on show, but I think 3M's looking towards a 112 and possibly is even putting the low for the stock moving forward. So I like that one. I think it's pretty good on the charts. And yeah, we haven't really seen the super defensive move that we would usually expect. Have a look here at utilities. So utilities had a couple of bumps that we talked about during August where we got little bumps, but look at this, just hideous at the moment. So yeah, we got some bumps, we got some holds, but that's nasty at this stage. And what I would do with utilities is I'm not done with it. I just going to set alerts. So 64, 40, that type of thing, 65. We're just looking for utilities to find some kind of buyers. The same thing here with staples, no defensive moves here in the market. See how the market's come back to those levels where we saw the bounce. Cool. Then we've pulled back down. And again, this is not usually what you see if the market's going to go absolutely collapsing. You usually see more accumulation here. So levels to watch for things like staples and stuff and healthcare are those previous highs. Mark those previous highs. They're going to be a big point. On the flip side, someone mentioned before, metals. Have a look at metals. Way better chart, yeah. Metals been very strong. Really nice pickups the last couple of days as we kind of have been spotting those BHPs, those iron ore stocks. You know, this is obviously on the American market as well, but you can see here that island reversal, really strong trade. Another one that we talked about was Vale, you know, really strong trade. I mean, look at this thing go. It's really smashing it off that island reversal at the bottom. So very, very strong metals trades. How many of you guys are in metals right now? Anyone else in metals? Even though that's contrary to what the mass media might tell us to do. They're all saying that metals are dead. Well, why are these things doing? I just read this comment. Drip Discoveries says, funny how oil jumped 1.5% when he said, I'm bullish on oil. I moved the market, guys. Don't worry. I've taken the super chat donation, chucked that baby into the markets, leveraged it 10,000 times over, and then I made it happen for you. Don't worry. Few of you are. Me, yes. Justin Gold. Okay, it's improved in recent days. And then that's a few other ones. I love that comment about bullish on oil, and it goes up 1.5%. Yeah, that's true. All right, let's go over here to Airbnb. Now, I got asked this question a bit, but it seems like the pre-market's already done it. So you guys were asking whether there's okay. So no, wait, your interest is this an island reversal here, and therefore the beginning of something bigger for Airbnb. So Airbnb opening with a nice gap today. Yeah, I mean, it's just all about risk reward. 142. So if I looked at this as a risk reward, let's say I was thinking about this 141, 142. I mean, the most obvious take profits there. Obviously, the most obvious stop's going to be underneath the island itself. So that's not really a 1-to-1. So you need to get it lower. So you need at least a 1-to-1. With your risk reward. And that's what I always think about. Beautiful base, though, on this stock. Really good entry a little while ago on it. I think we must have analyzed it. Yeah, that's a good entry, guys. So really nice entry, really nice base. Really solid pullback. So that makes sense because that's probably around a golden fib. And then we have here our kind of, yeah, I mean, it makes sense. It's not bad. It's not bad. I'd like it to come down a little bit first, though. Maybe not hold 6.5, maybe come down to 4 up. And then, yeah, look at it from a risk reward standpoint. But yes, Airbnb getting a bit of momentum here today. Has anyone ever traded the gold silver ratio? I don't usually trade the ratio between both of them. But you could do such a thing. And that's what we call generally you're looking at like a long short strategy there. So you're probably going like long gold versus silver. The only problem is with that is silver's like the crazy Ethereum, yeah? So when gold goes hot, obviously silver puts in huge percentages, but when the metal both turn off, often silver gets destroyed at a higher percentage than gold does. So yes, you can trade long short strategy. It's what hedge funds do. It's what long short funds do. And yeah, I love it, but it does exemplify your losses as well. Speaking of Ethereum and silver, let's move over to some Bitcoin thoughts. I know a lot of you aren't interested in this because we're predominantly a stock channel, but I like all markets. So we always talk about everything except for wheat. And this Bitcoin chart is very interesting. We're in September, technically the weakest period of time for Bitcoin. So if you have a look at previous Septembers, we've often sold through that period. If we go over to another year, let's have a look. I haven't even looked here. Let me see if I'm correct. This September. Oh, there we go. This September sold off as well. So there's the September sell. So we do tend to get September sells. Let's have a look at the previous year. Where are we here? This one probably should be bullish, yeah? There we go. September. See, we sold off. See, sell. So anyway, that's 100% strike record, yeah? But it does tend to sell off. It does look horribly weak, but I wanted to talk about the Bitcoin ETF. So I'm going to ask whether you guys think the Bitcoin ETF is a big deal or not. Let's have a look. We'll go to a poll. Start poll. Is the Bitcoin ETF a big deal? Yes or a no? That's all it is. All right, we'll bring that up. BTC, meh. We like BTC sometimes, but most of the time, no. We'll go back into some stocks in a second here. Tom, isn't that gold related to semiconductors because things like Nvidia doesn't work without GLD? I don't know if it's got enough usage. I doubt it. Silver's got a lot of corporate usage. I'm not sure about gold. Don't ask me about that though. It's not something I know. I like, man, some of you guys are funny when it comes here. All right, let's have a look. Might be a bull trap. Is the Bitcoin? So yes, 54%, 55%, 56%. Yes. Okay, you guys are thinking pretty flat through the middle. Look, I personally think the Bitcoin ETF is a pretty big deal if we do get a few legitimate ways of owning Bitcoin. And what I mean by legitimate ways, easy ways for people that are 45 plus. And I'm it's not to pick on anyone that's 45 plus, but let's be real. 45 plus people have lots of money. Okay. Lots of money. And if they have lots of money and they're often advised at the same time, what if they put 1 to 2% of their investment asset portfolios into alternative asset like crypto? This will allow them to do so. So I actually think it's a pretty long-term big concept, and I actually like it very much. However, when you look at a price like this, of course, I'm not going to buy the news. I'm just going to buy the concept long-term. So I want this thing to go blur first. 22,000, 20,000. I think underneath 20,000, very strong purchasing down there, I believe, will be had. And the main reason is just the halving event. Do remember it's coming. So, we're very much on the timer here. And we've got about 300 or probably 200 days now to really see what Bitcoin's all about. And I'd like to see a drop into the end of the year. We'll find out whether we can do it. It's a big deal because now the big guy can now short or long. And that's true as well. Anybody in here trading prop firms? Yeah, be a bit careful on the prop firm side, just so you know. A lot of them are, yes. Anyway, I'm not going to mention anything, but I just think you got to be careful with what you pick there. Like anything, it's like when you pick brokers, like when you pick anything, always think about your safety first on your money. It's going to be very, very important. All right, let's move over to some other markets. We'll go gold here. We've got 20 minutes till the market opens. So gold spot, not exactly giving us too many different changes or anything here towards the positive. Obviously, we've got US dollar going up, being the dollar index. So as that's going up, we're putting pressure on things like gold and currencies. In general, gold's just having a little bit of a pullback. Look at the 1920, I would think, for day traders. They're going to be watching this daily 20/1920 zone to see where the buyers recommit there. So that'll be an interesting zone should we hit it today, which seems kind of likely. And for the upside, you're looking at about 1962. GDX, let's have a look at GDX, which is, of course, the gold miners ETF. This should be coming down, which it is. Good. Let's get rid of that for a second. So we're looking for this to come down a little bit more. It did put in some strong positive kind of signs the other day. So we're looking for that back to about 28, 28.50. And then we'll see whether it can find some buyers around that area. But I do expect this pullback first in gold. And if yields do break out past 5% on the 2-year, it's going to be bad for gold. Bad, bad, bad. Yep, we will not like that. We will not like that. Let's close the poll now. 61% of you said or 60% of you said you do like Bitcoin ETF. The rest say no. Kevin says, I want 10 to 20, 12K support. D-Stripe Dave says, I'm 45 plus and I don't know enough about BTC. Okay. Well, there you go. But what if I told you, D-Stripe Dave, that you could buy 1% of your portfolio by pressing a button and you then hold Bitcoin? Would you do it? Or would you open up a miraculous account into the wild world of Bitcoin brokers and then transfer your cash over there? I probably think that most people after that age or any of those ages will not do it. That's just my opinion. We'll see if I'm proven right or wrong on there. When money When is a money inflow over ETF? It will be good for BTC. If not, then not. And get at me 30 says BTC ETF is going to be great. There we go. Thank you. Kyle J, $2. How does the BTC ETF different from BITO? I guess it's more of a let's have a look here. More of a legitimized version of it. ProShares Bitcoin Strategy ETF. Maybe it's just something to do with being a bit more legitimate. Not sure if this is legitimate, how legitimate this is, how it's even created. But yes, all of these types of things are what you technically want. Let me have a look here. This seems to trade fairly clearly with it. What I'm always interested in is whether it trades really, really close to it, also the price, etc. So I can't answer the question completely, Kyle. Well, there's your answer. Sick. Yeah, well, that's why it changes. That's gross. Ew. Futures. Yeah, that's terrible. Huge degradation. Huge degradation. That's what changes it. Gross. No, we don't want that. No. No one. No one's going to use that. That's just going to get you destroyed. That's like when you look at this and you look at something like Boyle, and people look at Boyle and they go, "Oh, look at this thing. It's so great. I'm going to burn natural gas and it's going to go up." Well, yes, if you search natural gas, it'll look like it's making new highs. But if you look at Boyle, it's not. Why? Just options futures rolls. So if we search natural gas now, check out the difference. All right, there's this. In fact, I'll actually I'll put natural gas on top. Natural gas futures, which is this one. Look at the natural gas. Look at the degradation of the bloody contract. Or natural gas up 11 over the same time that you lose 50% of your fund. So just be careful of the futures rolls. You get destroyed. This is why I really don't look at too much on futures contracts from the perspective of wheat or soft commodities, because they're just too dangerous, guys. That's correct. That is correct. Strapped Ape says, I'm more of a dividend investor, had a small position in BITO. Well, the problem is it'll usually get brutalized because of the roll contracts, which you can see there. So if you're not familiar, always look with every ETF you look up, you've got to check fact sheet. Yeah, go to your fact sheet. Too many people don't do it. If you get something out of today, or even if you help some other investors out there, search the ETF, go to fact sheet. So search that ETF fact sheet, look up what the hell it holds. People consider an ETF, they say, oh, it's an exchange traded fund. It's safe. Doesn't mean it's safe. It's an exchange traded fund. It can be incredibly dangerous. So you need to look into it and do a bit of research. And whenever you see futures contracts underneath the hood, it's always going to be usually a degrading asset. Easy way to look at it. If you put this thing on a 12-month chart, it's just going to be one giant red hellhole. Look at that thing. Whoa, yeah, I'm making so much money. Look at this. It's disgusting. So that's what's going to happen if you're holding that for too long. It's just going to destroy you. And then you're going to have no money. US oil just jumped to 87. What happens? I'm sure there was some announcement, but realistically, it's just, yeah, it's bullish, man. And there's nothing here. There's nothing here to stop oil. Oil cannot be stopped at this stage. It's generally speaking wanting to move towards that 88 to 92 a barrel at this stage. So once it made that weekly close, it's just a very, very aggressive kind of market. All right, we're about 14 minutes off the open. So let's just quickly go over our NASDAQ and S&P 500 positions again. We've got a bunch of new people coming through, so we want to make sure everyone's aware of it. So yes, we are at a pivotal point. Yes, we do think that we saw some selling in the US 500 and 100. Of course, key level for the NASDAQ will also be 15,322. If we do break under that and don't instantly reject back, we're probably moving all the way back down to fill in a lot of these big candles here. Probably 15,050 at that point, you would think, for the NASDAQ. US 500 would put in a 44.40, I believe. So key levels to be watching: 44.90, where we've just gotten to. Obviously 45.50 if you're a bull. I wouldn't be too concerned even if bears do end up mashing it down, because I still think bulls could easily do this to it later on. But yeah, it's going to be a critical little area out there. I expect 44.40 this week. Whether we get it or not, guess, but yeah, that's what I've been looking at. John Galt, member for 11 months. Thank you very much. John says AFRM, is it in the top? Let's have a look here. AFRM. Also, just a shout out as well, if anybody's interested, we do have confirmed ex-Goldman Sachs options trader coming to our Vegas conference as well. We've got a bunch of CMT speakers. It's going to be an amazing event. If you're interested, we've extended the early bird a little bit longer so people can get in. Do remember, it's a bunch of speakers. So it's not just me. I'm just speaking for only one or two panels. There are some things that are going to be learned at this conference that I think will be amazing, and you will also get a vid recording of it later on. So if you're interested, Vegas, 22nd, 23rd of September, and it's going to be an awesome event. I do look forward to meeting many of you out there. So Affirm, what is the question here from John again? It was, is this a top for it? It's a target that a lot of people would look for. Great trade. I have a feeling you got this the other day, John, and you've been riding this thing up. So I think our original concept was that this was a good TP zone, at least initially, but it is a very beautiful kind of accumulation, some nice volume going on through the lows. It could easily go to 25 plus. I think in these cases, you have to make your own decision, but generally speaking, you're going to see usually some resistance here. So you have to expect that. So whether you descale the position, so you basically just drop some of your position, take some off, leave some on, break even it. That's usually the way that people would look at this. The covert narcissist said Saudi extend cut of 1 million BDP, which is basically barrels. And Russia also did another 300K barrels per day, it looks like. So, yeah, just a restriction of barrels. They're pushing that baby up all the way to 90 to 92 to put pressure on everybody, I'm sure. For the kids, will you be encouraging yours to invest 10% of their monthly income into the Qs as soon as they turn 18? Yes, 18. Josh. He's already even my son, who's only 5 months old, already has some cues. Don't worry about that. But yes, look, I will. I think it's going to be, that's probably one of the things I hope to impart on my son anyway. And I'm sure many parents out there will do something like this, would be just to understand the finance system a bit more. And the reason why is because you go to our schools, it doesn't matter where you are, you're just not taught it properly. I mean, you might do half a lesson on compounding and then they're like, okay, now let's talk about this Louis Vuitton bag and how it's used to market. And you might want to buy that, by the way. We're taught to be consumers and we're taught to basically spend, because that's what makes the whole thing go round. But obviously, I don't know. I don't know about you guys, but I don't really want to be working when I'm 80 years old, which seems to be what everyone seems to think we should all do nowadays. Sicker than your average. Tom trades stocks off instinct. Nah, I trade off replication, man. I just sit there and chill until I get my replication. And as I say, patience, react, don't predict. I basically wait like a praying mantis or something until we actually find an opportunity. And what you're doing is you're often scanning the positions. An example of a position that I saw the other day that might present today or tomorrow or the next day is probably going to be something like Sherwin-Williams. Do we ever look at Sherwin-Williams? No. Do I think there could be opportunity here? Yeah, I do. I think there's opportunity here, although I would say it's more of a 50-50, but for more of a 2-to-1 style raid. What am I looking at? Well, I'm looking obviously somewhere around that 269 for this type of trade. So, if that does come down based on the upgrades it's recently got, based on this little flaggy thing, based on the way it's trading, I think it's got a fair enough chance out of 10. But these are the types of things you scan for. Is that as good as the metals trades? Nowhere near. The metals trades were way better after the last couple of weeks. Oz says he waits for the TAs to align. I wait for confluence. So you wait for like four separate reasons, maybe out of your 7 reasons, and then you'll want to you strike when you have that confluence. And the idea, and I say this to a lot of people in private shoots as well, and everything else I've done, is you look to go 40 reps. So basically, you want to get 40 of the same trade done, 40 replications. Once you have around those, then you usually know your stats. Let's say you win 26 out of 40 and you win them for a 1.5 ratio to 1, then you're in very smiley face territory. And if you can find 40 reps, let's say every 2 months, you are a massive winner. It's going to be good. The key then is to make sure you can scan for them all the time. Whatever happened to carbon credits to extract money from oil companies? Who knows? I have no idea about that stuff. I tell myself all the time now, patience, react, and predict. That's really good. Good to do that. OJ Gary says, I just want SPX back at 3,500 so I get more than 30% I put in. Yeah. Yeah, I remember when you put that in there. It didn't quite keep going to that 4. At least you got some in. Some people didn't, of course. But yeah, 40 or whatever it was. What was the price? 3,500. I'm not sure we're going to get a 3,500 print again. I don't think so. I don't think these central bankers want it anywhere near there. So we're 7 minutes away from the open. We're seeing some weakness mostly in the tech at this stage. US 500 also put in a bit of a short on the small time frames before during the Labor Day Monday futures. We saw some shorting around 45.24, which I think is notable. We get underneath 44.90. That really exposes 44.40, as we mentioned before. US dollar looks really strong. Oil looks really strong. News out of many oil countries is they're restricting more barrels, which is obviously helping push it up. The Chinese market seem to be defended somewhere around 38 on the CQQs, which is just basically like the Nasdaq, but the Chinese version. And we have Tesla that got a relatively large sell on it on Friday and obviously could have follow through to 230. AAPL's putting in about 1% today on the short. That had a large trade through Thursday, which could be reacting to today. Nvidia is random. I would probably just like chill on that one, but that's up to you guys. And if we have some stocks that you want us to look at, this is the time. So we've got 6 minutes till the open. Send me some stocks, guys. Good setups only. I don't want crappy ones so that we can check it out. Kyle J coming in with $2 first says, thoughts on IWM? Is it an island? So let's have a look at IWM. Is it an island? So, okay. So I think you're looking at it from an island reversal to the short. So it's going to open up at 189.68 at this time. So yes, it would be an island reversal to the downside. Obviously not much of an island because it only sat there for about a day. You got to gap up and you got to gap down. So technically, yes, it's an island. And I think more importantly than this, it's trading right in that range. So if you have a look at our video that we put out last week, and we had a little line that we put in the chart, which was right here at 1923. I mean, that was exactly where I expected, because effectively here we have a huge amount of trade. We have a lot of trade here. This is a very heavily traded zone. There's a lot of big trades through there. So if we do end up getting an island here, it makes sense again that the bears should be sitting here. The only problem I have is that way too many people see this one this time around, and that's always annoying. So it's just a rep. That's all it is. All right, here's a couple of questions that are coming through. What are you guys selecting as some stocks? Do you ever cover the Dow futures? Fairly rarely. So I don't usually use Dow too much. I found it to be an unreliable indicator for most of the previous, couple of years. If you have a look at it here on a daily, obviously it came off down this low. But yeah, look, the Dow has just been. I mean, you could say, well, look, Tom, you put a trend line behind that. Look at that bounced off here, and that was roll reversal, resistance comes support. It's all great, but I find that you just get better reads off the US 500s. AMD, that sounds like a good one. Let's do AMD. did this before today, so I was already looking at it. I've got some thoughts on it, obviously. So here is my trend line that I have on AMD. I do like the trend line. And I'm really looking at a 112 basically breakout. And a 112 breakout to me says the bulls are back in town. At this stage, I'm not convinced of any particular bulls or bears or anything. I'm very neutral on AMD at this stage. If we get above 112, I'm feeling a lot more bullish. And I think the pullback again met by bull demand at that point. So here, yeah, I think it could definitely turn over. Now, if we do end up failing and we push this trend line, that will probably tell us the market across the board is getting quite weak. And then we're pushing, I think, down to like an 85, 86 on AMD. So for now, if you're a bull, yeah, you can feel okay about it, but you really want that 112 to be taken through. Let's have a look at TAN. Yeah, good point. Solar has been smashed and now finding base. So I do like the look of solar. I have alerts underneath the last low, 55.38. I'm looking for that. I'm not sure we're going to turn just yet for solar. I haven't seen enough. I usually like a lot more. I am looking for a swipe of these lows to happen. So at this stage, I'm not bullish on solar just yet, but I do like these lows. And I think investors will be looking at this and kind of going, wow, this is starting to get cheap, from all the way from the low to the high to the low. Like this is really, really good territory traditionally. But because of the way it's come down, remember previously, it's always found strong buys here. Wick, wick, wick. What the hell's this? That's not a wick. That's a big ass body on the way down there. So yeah, not so good. Same thing with clean energy, PBW, I think. So we look at clean energy index. That's also incredibly low, finding base here. So this one, again, not really a turn point just for me yet. MP, let's have a look at MP. We've got 1 minute till the market opens, guys. We're down about 0.3% on the Nasdaq and only 0.02 on the S&P. MP, which is non-energy minerals, just swiped a low the other day. It's done a V. Some traders will like this because they're going to say, well, this has done the V I'm looking for, and I'm just going to trade this long. I could see a pullback, but in general, yes, this does look like it could be a low point for MP. And yeah, I don't mind it. AVGO, okay, Broadcom. Here we go. We're about to open up, guys. So it's happening right now. AVGO, in my opinion, has been forming a top, and I still think this is going to weaken over the next 3 months. That's just my opinion on it anyway. It's up, down 0.17 as we open. So ding, ding, ding. We are open for Tuesday, and it looks like the market wanted to instantly rally there as soon as the open came in. AAPL was down 1.1% before, now only down 0.6. We have kind of like a sea of greens that are starting to turn red. NVIDIA down 1. Markets themselves flat as a tack for the US 500. However, the futures market shows us a slightly different picture. So if you're thinking, you're like going, oh, I'm wondering where the bears are going to take control. I think 44.90 is going to be a key critical zone. There are arguments to be made that we've already seen small time frame shorts that have started to come through. But yeah, it's going to need to kind of short straight away here this morning and just pull, like maybe sit around for 10, 15 minutes and then find the bears, because we do want to see those bears push the market fairly quickly and then start to get into that 44.40 maybe in a few days if they can do it. Other stories were US dollar very strong, iron ore still holding very strong. So it shows us that maybe China's not super weak, if those down 2 today. And then we have US oil up 1.69% thanks to the drop of the barrels. So they're the stories at this stage. TLT also finding another day of weakness. Yields barely up, but yeah, treasuries, new auctions, really pushing those lower. I still think that we could get an 88.90 handle on treasuries. All right. Thanks for AVGO. Yeah, no worries. Tom, what do you think about DE? Let's have a look at John Deere. It's been a while. Quite a strong comeback on it, isn't it? This is obviously a pretty strong ag stock / AI in ag, I guess, is what people think it is. I mean, it came off one of my little yellow lines, which you can see here. I do like that yellow line buy. Oh man, it's tough to buy it at the multiple it's at. It's worth 120 billion. It's just a trade after all. Look, I guess this one probably goes towards 440. It does look like it's starting to get ready to break 440 though and go to a new high. I don't hate it. I think it looks okay, but yeah, just the pickup or where it went to was it's already done it. So what do you do? Logan says, "You know your stuff, Tom. Thanks. I know a decent amount, but no, you're always learning, guys. You're always learning." David 13 says, "Tom, bullish or bearish week? Talk to me, please." Well, based on where we are, I guess we'll go with bear rating for this week, man. But the odds say 50-50. So we're just using the technicals. We need that kind of 44.90 to be closed below to really solidify a bit more bearishness. Next week after that, I'd probably say bullish. It's heavily statted towards bulls. And then post OPEX would be the bearish week. If I was going to have one guess. That's obviously my thoughts. But like anything, it's not really so much do you call a bullish or a bearish week. It's about finding the replicable setup. So, I think people focus too much on, oh, is it going to be bullish or bearish? Well, who really cares? Just find the replicable setup. And then whatever direction the replicable setup is in, just take that. It makes it much easier. So that's what you're looking for. Cold Steel, $5. Thoughts on Riven and SPWR? Okay, we'll take a look at those two. Let's have a look here at Riven. Start off with Rivian. So, it almost got, it almost got that pullback to 61.8. So I think I hated on this a little while ago when it was there, and I said it was probably going to come down here, if I remember rightly. Oh, didn't quite get to my level. That's a little bit of a shame. I guess it looks relatively good. I mean, I'm not buying this with a 10-foot barge pole, but yeah, I can see that it's doing its thing. And if we get a lot of people are going to say, "Oh, look at this. We could take a invest head and shoulders approach to it." And then if we did that, we took the head to the shoulder. Let's have a look at the price targets. So price target's pretty well in. That's good proof to 40. So yeah, it looks pretty good on the charts, I would say. Not too bad. I'm not touching it with a 10-foot barge pole, though. I will say that. Speaking of which, where are my favorites, SoFi and PLTRs? So SoFi is still not low enough for me. And PLTR, let's have a look at Palantir. I heard it got downgraded the other day. Oh, they look the same. They're the exact same trade, guys. They're the exact same trade. And what's this? Spewer. Sun Power Corporation. I thought this thing died. I remember this from back in here. I remember there was I think it was like a Twitch streamer or something, and he lost like all his money. So he'd been streaming for like years, and he put all his money in Sun Power, and it died on him. It like went blur like this, and he was like, "Oh," I felt bad for him. It was terrible. He lost like his 200,000 or whatever he had. Yeah, no, I don't like this at all. Not just because of that story, but also because I don't really understand how this has changed any trend yet. And if it has, I guess it's changed like a puny trend. Oh, do I really want to get involved in it? I guess you could, but it's just replication, and you would have to have you'd have to have your stop loss target. D Strap Dave says, "I actually like SoFi long term." Yeah, it's cool. I like the price is fine. I just want it better price. Better price, damn it. What's that? Check UEC. Uranium. Yeah, uranium was really hot the other day. It's still going. Yeah, uranium were good positions, and they look very strong. I'm actually pretty bullish on uranium. I just think it's the logical step that we have to probably do, considering the coal issues. So yeah, I think it's on breakout. When uranium gets hot, you kind of like looking for these giant candles usually. So still more action potentially on this, though I'm not going to get into it here. But if you are in it, well done. Good work. Biff Helm says tech may walk back a bit after the success of the last 2 weeks. Yeah, that's my thoughts as well. Disney is the falling knife. Yeah, Disney hates pre-election years, but it is absolutely getting destroyed by, I don't know. It's terrible destruction of all of its franchises. That's what it's been doing. I still think it's going to 78, 71 and lower. And yeah, I mean, I had a little buy in here, but it failed. It was a fail, guys. Chris says when uranium gets hot, it creates energy. There you go. All right. Well, I think, oh, and Netflix is a question here from Brad. So we'll put that one in for you, Brad. All right. So have a look here. Netflix. Pretty sneaky is a Netflix. Yeah, that does look like a pretty nice little change to the upside. I guess looking for a little pullback here would be nice. That is a nice breakout for it. Good low steal. Yep. Looks like an accumulation. Obviously, the stock was brutalized. So, yep, it does look relatively good on the charts. And I think a little pullback here, maybe, well, I'll say a little pullback, probably about $20. Could be kind of bullish for it. Looks kind of nice. All right, guys, we'll leave it at that. Seems like the rotation at the moment is mostly US 2000 shorts. So the person that was talking about this being an island reversal before, which I think might have been Kyle or someone, is probably happy with themselves, a little smiley face, because they're getting the short coming through at this stage. And yeah, it looks like Nasdaq's actually strengthened a little bit in comparison to the US 500, which has weakened more. That's what we'll maintain at this point. We've got most of the big techs need to give up a little bit of their gains after such a ballistic week. We've got treasuries, auctions all over the place for bonds, and we're looking towards a little bit of weakness here for US 2000 profit takers, probably looking around 1872. Thank you very much for being part of the stream. If you enjoyed it, make sure to smash the like button, and we'll see you next week for another live stream here. It will be Monday. And do remember, if you're interested in attending our Vegas conference, links in the pinned link, and definitely check it out because it's going to be an amazing event. We've got some really good speakers, and these guys know their stuff. They've got probably collective over 100 years of history knowledge, but more importantly, they're specialists in different TA fields and statistical evidence fields. So it's not just like, oh, here's our thoughts and opinions. It's actually, let's back that up with some stats and stuff. So it's going to be good. Roku flying. Oh, I have to look because I've obviously been a hater on Roku for a long time. Let's have a look here. Up 1.98. You lied to me. You said it was flying. But in all seriousness, yeah, all these stocks, like even the Rokus and stuff, I would not short them anymore for a long time. I've said they're base ages ago. It's okay. It's like any of these other hyper stocks. They've all got nice bases. I mean, you look at RK, and that's a hyper stock in itself, in my opinion. And I liked it where it was, and it's still just floating around the same level. So it's good. So someone stick me in your suitcase. I don't think you'd like that flight, Dave. It'd be pretty bad. You'd be in there with the dogs and the cats screaming underneath. Oh my God. All right. Thank you very much, guys. We'll catch you next week, and we'll see you for the daily show tomorrow, or the close of Tuesday for everybody else in the US. Thank you, and have a great day. Bye-bye.